Hey guys, it's Aman
And Christina
from Our Rich Journey. We are going to be talking about the Amazon stock split. And we are so excited to talk about everything that is going on with this particular stock. Because on Wednesday, Amazon announced that it was going to be splitting its $3,000 a share stock down to about $150 a share with a 20-to-1 split. If you don't know what that means, we are going to explain it in this video. But what is taking place with Amazon is huge. It is tremendous. And it is a great opportunity for us to share our perspective on whether or not this is a good investment moving forward.
So Amazon is currently selling at about $3,000 per share, but from the point of its all-time high, that is actually about 30% lower. So we actually think that Amazon is selling at a discount now. So in this video, we are going to talk about specifically Amazon stock split. We're going to talk about what a stock split is. We're going to talk about why Amazon is doing this stock split. And more importantly, we are also going to be talking about whether we think it's a good time to be investing in Amazon now before the stock split or after the stock split occurs. So one of the reasons why we love talking about Amazon is because of its incredible returns. Since its inception in 1997, Amazon has had over 190,000% return. So that makes it one of the highest returning assets of all time. I mean, compare that to Apple, which has had incredible returns also since its inception. For Apple, its return has been a little over 140,000%.
Another reason why we are excited about Amazon is because we also invest in Amazon. We are owners of the individual stock, and we have also been investing in it in our index funds and ETFs. And so to see the appreciation throughout the years has been something that we have benefited from. Now, we are telling you this as full disclosure because you are going to see the exuberance that we have when we talk about the potential growth for Amazon in this video. And we want to be completely clear that we also own shares of Amazon. Now, if you guys are interested in seeing how we invested to achieve financial independence, check out our stock market investing course. Within that course, you not only get a plan on how to achieve financial independence by investing in the stock market, we also share how we invested in the stock market by sharing our actual holdings. We share the holdings that we use to get to FIRE, and we share the holdings that we are investing in right now in FIRE.
So before we get into the Amazon stock split, let's talk about what a stock split is in general, because it can be a little bit confusing, but it's actually really straightforward. So when a stock split occurs, you're actually mathematically not creating extra value to the holders. You're just creating more shares without diluting the total value of your investment.
So a stock split increases the number of shares outstanding and lowers the individual value of each share. Now, while the number of shares outstanding changes, the overall valuation of the company and the value of each shareholder's stake remains the same. So a stock split is the financial equivalent of slicing a pizza into more pieces. When a company goes through a stock split, it uses a particular ratio to indicate how many new shares each outstanding share will be broken into. Investors will receive a number of shares that's equal to the current stake in the company but reflects the new stock split.
So we'll give you an example. Let's say company A sells its stock for $500 per share, and they decide to do a 2-to-1 split. That means if you own that share for $500, you now own 2 shares for $250 each. So ultimately, the value is actually the same, whether you own 1 share of the exact same company for $500 or if you own 2 for $250 each. So the question becomes, why do companies do a stock split in the first place? So the first reason is accessibility. Sometimes shares get so high in value or cost that it makes it harder for new investors or any investors in general to invest in that stock. So say a stock sells for $20,000 a share. Some investors might not be able to invest that $20,000 to buy that stock. But if the company is able to split the stock and lower the price per share, that allows more investors to invest in that company.
So splitting a stock is an effective way of getting more people to invest in a company. By lowering the price, it opens up the marketplace for more investors to come in that have lower amounts of money to invest.
Another reason for a stock split is that the company may want to allow their employees to better manage their shares. So, for example, some employers offer stock options to their employees as part of their compensation package. Now, let's say an employee wants to sell one share of their stock in a company, and let's say that stock is worth $3,000, but they may not necessarily want to sell $3,000 worth of that company. Maybe they only want to take out $150 or $200 or $300. So by splitting the stock, it allows employees to better manage the sale of their shares.
The third reason a company may want to split a stock is for notoriety or bragging rights, really. If a company can say, oh, we've split our stock 3, 4, 5, or 6 times, it shows that that company has been experiencing growth. A company that has never split its stock, maybe it shows stagnation. But on the other hand, if a company is splitting its stock multiple times, you're showing other shareholders, other investors, that your company is a growth company. And in fact, the NASDAQ did a study and found that companies that split their stock on average outperform the overall stock market. The fourth reason a company may want to split its stock is so that it qualifies to be listed on certain indices. Now, certain indices require lower share prices in order to be listed on those indices. The Dow Jones is an example of that. So when a company goes in and splits its stock, it lowers the price and allows it to be listed in more places. And by doing this, when you're added to more indices, you open yourself up to a greater amount of people that can invest in that company.
So those are some of the reasons why companies may do stock splits. But we did want to point out one very notable company that has never ever done a stock split since its inception, and that is Warren Buffett's Berkshire Hathaway. The share for Berkshire Hathaway sells at over $480,000 per share. Now, if you think about companies like Apple or Amazon, if they had never done a stock split, their price per share could be so high that so few investors could invest in that company. Now, there are things like fractional shares that some brokerage firms allow investors to do, and we're not going to get into that. But in general, if you don't have that option of doing a fractional share, it makes share prices much more expensive without a stock split.
So let's get into our thoughts about Amazon and their stock split. First, let's just start with the overall stock split. So the stock is going to be splitting 20 to 1. That means for every 1 share that you currently own of Amazon, you are going to be getting 20 shares in return. Now, the reason for this is that Amazon has not had a stock split in forever, actually since 1999. So between now and then, this stock has just been going up and up and up, and so they're doing such a big stock split. Traditionally, a stock split is usually 2 to 1, 3 to 1, maybe 5 to 1. So doing a 20 to 1 stock split, that is a tremendous split. And we think that this is actually a great thing from a psychological standpoint, because there have been so many people that have been looking at Amazon as this $1,000 per share company, and now they're going to see it as something that is more accessible to invest in. So there's going to be a lot of excitement that potentially can push the price up even higher.
Now, just one thing to note, of course, Amazon has already announced its plans to do this stock split, but it still needs to be approved by shareholders. And that's usually just a rubber stamp, but that's something to keep in mind. And assuming that it gets approved, this stock split won't go into effect until June. So when this stock split goes into effect, the price per share is going to go from around $3,000, where it is now, to about $150 per share.
Now keep in mind, those numbers are based off of the stock split if it were to happen today. But like Christina said, the stock split isn't happening until June. So if the price per share of Amazon goes up between now and then, the price of the split could be much higher than 150. No one knows. It could also be much lower. So with all the excitement that's going on right now with Amazon stock split, some of the questions you might be asking yourself is whether or not you should be investing in Amazon. You may also be wondering is whether or not you should invest before or after the stock split. Well, you know that we invest in Amazon, and so we want to take this moment to talk to you about some of the reasons why we like investing in Amazon and use that to make your decision about whether or not you should invest now, later, or invest at all.
So one of the reasons why we really like Amazon is because of its potential for growth. Right now, it really dominates online sales and it puts a lot of pressure on traditional stores. But it's not just the online sales that it dominates. So for example, it's also a streaming service, a medical company, a web service and technology company, and it's also an advertisement company. And not only that, it also expands outside of that area and has stakes in really interesting companies like an electric car company called Rivian. So those are some of the reasons why we see so much growth potential from Amazon, but it's not just us as investors. Amazon is putting its money where its mouth is by also investing in itself by buying back so much of its shares.
So the buyback was another part of the announcement that Amazon was splitting its shares. At that same announcement, it announced that it was going to buy over $10 billion worth of its own stock. This is huge. It's one of its largest purchases ever, and it's a testament to the belief that the company has in itself. So if you are following suit with this, you feel confident as an investor also investing in Amazon. Now, something else that makes Amazon really appealing at a time like this is that it is down almost 30% from its 52-week high. This looks like a sale from our perspective, and one of the reasons why every month when we go in to buy Amazon, we feel like we are getting it at a tremendous discount. So with all of that said, let's answer the question, should you buy Amazon now or should you buy it later after the stock split goes into effect? And the ultimate answer is, it all depends on your investment plan. I know that's gonna make a lot of people mad, but Christina and I are strong believers that when you invest, you must invest with a plan. And so all of the frenzy and excitement that is going on right now with Amazon, what does your plan call for when this excitement takes place? Is this something that you have planned for? Have you set aside money to take advantage of opportunities like this? Or are you just someone that follows the fad? Well, when Christina and I invest, we invest with a plan. And our plan calls for us to consistently invest in Amazon as scheduled. We're gonna continue to buy the same amount of shares that our plan calls for.
So in other words, our plan calls for consistency. We are going to be investing the same amount in Amazon now, each month up until the split. And when the split occurs, we will still be investing the same amount because that is what our plan calls for. So hopefully this has given you a really great concept of how stock splits work, to give you an idea of how Amazon may be impacted by the stock split, and you can use that information to really determine how you want to invest moving forward. So of course, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.